class. Okay, so let's continue with the second video, discussing 1.2 of the syllabus, or the characteristics of a contract of partnership. So there are 7. Number 1, consensual. A partnership is perfected by mere consent. So under Article 1319 of the Civil Code, which is not part of our discussion, but I will just include it here for your information, consent is manifested by the meeting of the offer and acceptance. So, you have discussed this under obligations and contracts, so I will not read further on. I just want to refresh your memory. So, under Article 1327, also under contracts, the following cannot give consent: unemancipated minors, insane or demented persons, and deaf mutes who do not know how to write. Since insane people cannot give consent, there is an exception. They can enter into contracts when it is proven that they did so during lucid interval. Yeah. So, also under Article 34, those suffering from civil interdiction are deprived. This is Article 34 of the Revised Penal Code. Civil interdiction shall deprive the offender during the time of his or her sentence of certain rights, such as the property rights. So this will affect also their ability to enter into a partnership. Also, so let me just write that down. For those who want to learn further, I have mentioned Article 34 of the Revised Penal Code on civil interdiction. Also, Section 2, Rule 92, and Section 1, Rule 96, both of the rules of court, which have now been changed. But I just want to place it here still. Those who are incompetent or suffering, which includes those suffering the penalty of civil interdiction, those who are hospitalized lepers, prodigals, deaf and dumb who are unable to write, yeah, they are actually they will be placed under guardianship. So that will restrict their ability to enter into a contract. Syempre, automatically also partnership contract. So the question is, why must it be consensual? Sorry, I forgot that I had an animation. Why must it be consensual? 1, it is a contract, and a contract requires consent. 2nd, the partners become personally liable for the partnership's losses or obligations if the partnership does not have enough assets. So if you want to go into business, wouldn't you want to choose who you want to be with? For example, let's not even go into a business. If I say I'm going to assign a group paper, would you be, if you were grade conscious, or you want a decent grade? Of course, for accountancy students like yourselves, your minimum passing is 2.0 and not 1.0. You wouldn't want to be grouping with just any person there, diba? You don't want to be with a free rider. You'd want to choose someone that you can rely on. So goes same goes for a partnership, because in a partnership, if you go belly up or if you experience a net loss and the partnership does not have enough assets, you will the creditors can run after your personal assets. So of course, you want to be with a partner that you can trust, or at least is competent to do the business that you're planning to do. Yeah, so this is also echoed in Article 1818, which we will discuss later on, where partners are agents of the partnership. Yeah, so therefore, whatever a partner does will bind the partnership. So, a partnership, because of that, involves trust or confidence. It is actually a fiduciary relationship. Or, if you hear it, you see it in the book, delectus personae, meaning you have a choice of the person, much like a romantic relationship. There is an exception to this where you can choose your partners, is a limited partnership under Article 1866. But as I've said, we will discuss that later on in our future videos. So, the admission of a third person as a partner normally requires the consent of all. As I've said, because it's a consensual contract. So, if someone, say for example, partners A and B entered into a partnership to sell, I'll continue my previous example in my previous video. A and B decide to sell surgical masks and 95 masks. If, say, B wants to sell his or her share in the partnership to, say, C does not become a partner. C will just be an assignee if there is no consent of B. Yeah. So, because of this, a partnership has no right of succession. That's why, for those of you who have family members like parents who are lawyers, doctors, or engineers, architects, what else? Accountants, of course. If your parents or your relatives have a firm and they, go into the afterlife, does that mean that you can automatically replace the firm kasi you have the same last name eh? No, not necessarily true, because as I've said, a partnership is consensual in character, and we will discuss this at the latter part of law on partnership, that the partnership is dissolved upon the death of one of the partners. Yan. So there's a part in De Leon's book and also in Soriano's book, another book that I'm reading, that a partner has the right to choose their co-partners unless otherwise provided in the agreement. Now, it says unless otherwise, meaning it's like you're saying you're giving an exception to the consensual rule. My personal stance is that it's not an exception to the rule, because if the partnership agreement says na you are waiving your right to, meaning whoever, for example, in a partnership between A and B, there is an agreement that B can choose whoever will be added into that partnership. If A signs that agreement, technically A is still choosing who the partner is, but A is allowing B to make that choice for him or her na lang. So, that's just my take. By agreeing to the stipulation, it's as if the partner gave his or her right to choose someone else. They just gave that right to the other partner. And so, corollary to the consensual nature of partnerships, the power to dissolve a partnership is generally at the will of any partner also, which we will discuss under Chapter 3, starting Article 1828. So, because it is consensual, under Article 1775, associations and societies whose articles are kept secret among the members and wherein any one of the members may contract in his own name with third persons shall have no personality and shall be governed by the provisions on co-ownership. Now, what is the key word here in 1775? Associations and articles whose articles are kept secret. The articles of partnership. These are for partnerships that actually have articles. Or for those who have, because a partnership can be created by verbal contract, in cases where one of the members may contract in his own name with third persons, meaning these third persons can never know there's actually a partnership because that transaction is made in their own name, will be governed by co-ownership, not partnership. This is not allowed. So, the reason, it is essential that partners are fully informed not only of the agreement, but of all matters affecting the partnership. Because, as I've said, a partner is an agent of the partnership, no? So, it serves as a protection to the partners and to the public. This should be read in conjunction with Article 1806, the one at the bottom. Partners shall render on demand a true and full information of all things affecting the partnership or to any partner or the legal representative of any deceased partner or a partner under legal disability. Now, There are qualified exceptions to the consensual characteristic of partnership. I say qualified because under Article 1782, which we will discuss now, persons who are prohibited from giving each other any donation or advantage cannot enter into a universal partnership. And I will discuss what a universal partnership is later. So, under the family code, I'll just put this here because it's not that important. For your information only. Under Article 87 of the family code, every donation or grant of gratuitous advantage between the spouses during the marriage shall be void, except moderate gifts which the spouses may give each other on the occasion of any family rejoicing. Okay, so this prohibition shall also apply to persons living together as husband and wife without a valid marriage. So, the purpose of this is because what the law does not allow you to do directly, meaning under the family code, spouses or common law spouses cannot donate to each other. You cannot also do indirectly, meaning you cannot do it by a partnership. Otherwise, you're circumventing the family code, diba, by using the law on partnership. So, that's why we put Article 1782. Persons who are prohibited from giving each other any donation cannot enter into a universal partnership. Another qualified exception. Normally, partnership is consensual, except and can be made in any manner except where immovable property or real rights are contributed, in which case a public instrument shall be necessary. And if I may add, later on we will discuss this, there's an addition. 1773 states you also need an inventory of this real property. Otherwise, it's void. I will discuss it later. Now, number 2, it is principal, meaning a partnership's existence or validity does not depend on the validity of another contract. It stands alone. See, that's why that little fishy went to the other boat. Number 3, bilateral or multilateral. It is entered because it is entered into by two or more persons whose rights and obligations are reciprocal. When you say reciprocal, each partner has a right and an obligation towards the other, meaning there are no free riders here. Number 4, nominate. Simple, means it has a special name under the law. Under 1767, it's called a law on partnership. A contract of partnership, rather. Number 5, preparatory, meaning a contract of partnership is only a means to an end, the end being the realization of profits or exercise of profession. Number 6, it's onerous. The partners must contribute money, property, or industry to a common fund. Meaning there can be no free riders again, where a partner just joins, doesn't do anything, doesn't give anything. Number 7. Now I put an asterisk here because this was added by Attorney De Leon in his book, but not in Attorney Lacos' notes, if I'm not mistaken. It is an added requirement by De Leon, explaining that the undertaking of each partner is considered as the equivalent of that of the others, meaning you give and receive something of similar value. That's why I put here the picture, give and take. So you might be wondering, why would we need to discuss the characteristics and features of a partnership? That was a very long discussion for something that's not in the code, and we have 101 articles to discuss. Can't we just stick to the definition under Article 1767? I used to ask myself that when I was in BSA and DLSU. The answer is, the law cannot define every type of partnership that may be entered into. Otherwise, it would stifle the future partner's right to associate with others. So the issue of determining the existence of a partnership is a factual matter, meaning it would depend on the facts and circumstances of each case. So everything actually boils down to determining the party's intent. intent to create a partnership. Thus, partnership is generally a matter of intention. So, given the broad definition under 1767, it would thus be inevitable, meaning you cannot escape, to have instances where these partners, so-called partners, do not know if they actually formed a partnership. Or sometimes, the partners will deny because the enterprise was already at a loss. The first thing to do in case of doubt would be to see if all the characteristics and features which we discussed earlier were present. In another book, I will not say who, so you will not be forced to read it. Anyway, it's not that important for law students. There are always two tests which must be applied to determine the existence of a partnership. Horado says first, whether or not there is an agreement to contribute money, property, or industry to a common fund, and second test is the intent to divide the profits among themselves. In case there is still doubt, we refer to Article 1719. So, under 1719, it excludes from the category of partnership features we already discussed. It only means that these features by themselves, without any other features, do not mean there is automatically a partnership. This is Article 1769, and I'll keep it here while I'm discussing. In determining whether a partnership exists, these rules shall apply. Number 1, except as provided in Article 1825, persons who are not partners as to each other are not partners as to third persons. I'll stop here first in number 1. This is just the reverse of the rule that persons who are partners to each other are partners to others. This is just the reverse of the rule that partners who are partners as between themselves are partners in the eyes of third persons. This is because a partnership is a matter of intention. However, partners who are actually partners, meaning in the legal sense of the term, may not avoid the consequences of their relationship by a mere denial. So, regardless of whether they call themselves partners or not, there is an exception to this rule. Partners who are not partners as to each other are still partners in the eyes of third persons when there is a partnership by estoppel or estopel. So, this is covered by Article 1825, and we will discuss this later because it's a very long provision, so I will not discuss this in this topic. Basically, under Article 1825, or a partnership by estopel is actually how we pronounce it. It is where a person acts or conducts themselves in a way that third persons think or are led to believe in good faith that they are dealing with a partner. So we're talking about a person's conduct. For example, under De Leon's book, if A and B are not partners as to each other, they will also not be partners with respect to C. Meaning, in the eyes of C, they're not partners. But if A, with the consent of B, represents to C that they are partners, then A and B will be considered partners as to C, even if it's not true. Because you led an innocent person here, C, to believe that you are partners. Number 2, co-ownership or co-possession does not itself establish a partnership, whether such co-owners or co-possessors do or do not share any profits by the use of the property. So under Article 4, I'll write it down. Under Article 484 of the Civil Code, which again, as I'm saying, you don't need to know or memorize, there is a co-ownership whenever the ownership of an undivided thing belongs to different persons. So there's a difference between a co-ownership and a partnership. I will just discuss, and I won't put it in the PowerPoint anymore. A co-ownership is created by law, whereas a partnership is by agreement. A co-ownership does not have a separate juridical personality. The purpose of a co-ownership is the common enjoyment of a thing or right. Whereas in a partnership, again, our main purpose is for profit. Under the law, a co-ownership cannot exceed 10 years, whereas a partnership has no limit. The disposal of one's interest may be freely done in a co-ownership, whereas in a partnership, all partners must agree before you assign your shares. Because technically, you're bringing in a new partner. So in a co-ownership, you cannot represent a co-owner cannot represent the co-ownership when acting with other persons. While in a partnership, a partner may act on behalf of and represent a partnership, except if there's an express stipulation that there's a particular partner who will do that. And lastly, one of the differences, in a co-ownership, a co-owner's death will not affect the co-ownership. Whereas in a partnership, if one dies, then the partnership is dissolved. So, why is there a need for number 2? I said so many things. Because under Article 1811, I'll just write this here also, but we will discuss this again later. A partner is co-owner with his partners for specific partnership property. So, the use of the word co-owners in 1811 might cause confusion. That's why it's here then. So, for example, A and B put up money to buy a sweepstakes ticket for the sole purpose of dividing equally the prize money which they may win. In this case, they formed a partnership. But if the sweepstakes ticket were just given to A and B and that ticket won, there is no partnership because they weren't planning to do a business. They did not contribute money, property, or industry. It was just given to them. So number 3, let's continue. The sharing of gross returns. Am I saying it correctly? For those who are also taking up economics, it's gross, no? So, for the sharing of gross returns does not itself establish a partnership, whether or not the persons sharing them have a joint or common right or interest in any property from which the returns are derived. Because the reason for this rule, number 3, is because partners share profits after satisfying all of the partnership's liabilities. So the key term here is gross returns, not net. So we will study this later when we discuss Article 1812 and 1839. But that's still far when it comes to dissolution of the partnership. Okay. Let me cite 2 Supreme Court cases under number 3. In one case, Pascual versus the Commission of Internal Revenue. Pascual and Dragon, they are partners, purchased 2 lots in 1965 and 3 more lots the year after in 1966. So, the first 2 lots they bought in 1965, they sold in 1968 or 3 years later. While the 3 lots they bought in 1966, they sold in 1970. So, the Commissioner of Internal Revenue was trying to run after Pascual and Dragon for corporate income tax. I'm not sure if you've taken up, because you're taking up income tax right now, you will see from the National Internal Revenue Code that partnerships are treated like corporations when it comes to the payment of their tax liabilities. So, now, the partners were saying, no, we're not a partnership. We're just buying property and then we just sold them. The Supreme Court ruled in favor of Pascual and Dragon. Using number 3, they said the sharing of gross returns does not itself establish a partnership. There must be a clear intent to form a partnership, which they don't. In this case, in the case of Pascual, there is clear evidence of co-ownership. There is no adequate basis to support the proposition that they formed an unregistered partnership. The Supreme Court in that case treated the purchase of the lots as 2 isolated transactions. That did not make them partners. They only shared in the gross profits as co-owners. So the Supreme Court in that case distinguished it from another case, the case of Evangelista versus Collector of Internal Revenue. Kasi in Evangelista, the partners there, the petitioners, purchased 24 lots. And there was a series of transactions showing that they were actually in business. They were not purchasing lots for its preservation. It was actually a business transaction. So, the 24 properties that were purchased in the case of Evangelista were leased out to tenants for several years. So, they were in the business of renting it out. And in fact, the business was under the management of one of the partners. So, that existed for 15 years. But none of those circumstances were present in the Pascual case, the one I told you where they bought 2 and 3 lots. That's why in that case, the one with the 2 and 3 lots, the Supreme Court said there was no partnership. Okay. Now, let me just add, in the Book of De Leon, he gave an example. If I may, instead of letters, I'll use names. Alfred, the owner of a jeepney, agreed with Bob, a driver, that Bob shall have full control and use of the jeepney to carry passengers, pay for the cost of repairs and other expenses, and that the gross receipts are to be divided between them. There is no partnership as there is no sharing of profits. The example on De Leon said that Alfred and Bob will share in the gross receipts. So, A's share will not be deducted by expenses for the repairs. Yeah, that's why article number 3 will apply in that case. Okay. Last, number 4. The receipt by a person of a share of the profits of a business is prima facie evidence that he is a partner in the business, but no such inference shall be drawn if such profits were received in payment under A to E here. So let me just clarify. What is prima facie evidence? In a Supreme Court case, Waakon versus People, the Supreme Court said, prima facie evidence is evidence that is good and sufficient on its face. So, prima facie evidence is sufficient to establish a given fact if it is not rebutted or contradicted. So, again, in other words, prima facie evidence is evidence which, if uncontradicted, is enough to sustain a judgment in favor of the one who supports that evidence or uses that prima facie evidence. So, again, having that definition in mind, under number 4 of 1769, the receipt of a person of a share of the profits of a business is prima facie evidence, meaning generally he will be considered a partner. But you do not make that assumption if the profits were received in payment for a debt, as wages, or as rent, as an annuity to a widow, as interest on a loan, even if the interest will depend on the profits, and as consideration for the sale of a goodwill or business by installment. So, in the case of, say, for example, letter A, it is possible in some businesses because some partners owe a lot to a particular creditor. It is the creditor who will manage the business because the creditor wants the business to succeed. If the business fails, the creditor will not be paid. So in that case, the creditor is not a partner. Letter B, as wages or rent. This talks about, say, employees who are on commission basis. They are not partners even though their commission will depend on the profit because it is wage. They are an employee. And as for the rent, if everyone is familiar with the SM, Shoe Mart, SM, the rent for concessionaires, those who are selling in the SM malls, actually depend on the percentage of net profit. But that does not make SM a partner in the businesses there of the concessionaires there. So, I will end this discussion. That's our second video under 1.2. And I will see you on the next video under 1.3 of the syllabus, where we will discuss the formality of a contract of partnership.